Hi, my name is Hannah Lohman, and I am a member of the QSDsan group that uses quantitative sustainable design for sanitation and resource recovery systems. The previous tutorial video covered the basics of system, and so in this video we will discuss techno-economic analysis, or TEA. We will cover using the simple TEA class and developing your own TEA or simple TEA subclass. And so you can find this tutorial on our documentation page under the tutorial section, and here you'll find the Techno-Economic Analysis TEA tutorial. And so first, let's import QSDsan. And so you can see what version you're using. So here we're using the most recent version of QSDsan. And so first we'll get started by using the simple TEA class. So TEA can be performed through subclasses of the TEA class in BioSteam, but you cannot just use the TEA class. The TEA class is an abstract class, and we'll talk about this later in the tutorial. In QSDsan, a simple TEA class is included for basic TEA. So you can use the simple TEA class if you don't need to consider financing. The system does not have a startup stage, which just means that all operating costs and sales will stay the same year to year, and you do not have additional capital costs that other than the ones already considered in the equipment of each unit. So if you need more than simple TEA provides, you should consider making your own TEA subclass, which we'll talk about in section 2 of this tutorial. And now I'll talk about the difference between the annualized equipment cost and annualized CapEx, capital expenses. And so in simple TEA, there are two attributes related to annual capital cost. This is annualized equipment cost or annualized CapEx. And so the difference between these two just is related to whether or not you want to include salvage value for equipment that still remains at the end of your project lifetime. And so first, the annualized equipment cost is calculated as the sum of annualized capital cost of each equipment. The annualized capital cost of each equipment can be calculated using this equation, where R is the discount rate and the lifetime is the lifetime of the equipment if provided, the lifetime of the unit if provided, or the lifetime given in initializing the simple TEA instance. And so this value becomes optimistic when the TEA year is not divisible by the lifetime of the equipment. For example, if you're doing a TEA for 10 years, but the equipment lifetime is 8 years. Using this method, you are implicitly assuming that you can salvage the remaining value of the equipment. So on the other hand, the annualized CapEx uses the annualized net present value, or NPV, calculated from the cash flow analysis to get the annualized capital cost. And so this is the equation that you would be using to calculate annualized NPV. And so here, the NPV is just the net present value. R is the discount rate that you're using. And again, lifetime would be the lifetime of the TEA, which would be the one provided when initializing the simple TEA instance. And so the annualized CapEx is annual net earning minus annualized net present value. And then there's also equivalent annual cost, which would be calculated as the annual operating cost plus the annualized CapEx. And so in this method, you would not be assuming there would be a salvage value for equipment that can still be used at the end of the lifetime. And so if you're unsure, you can always look at the source code to determine which methodology is right for your system. And so first, let's get started with an example. So I will copy this into my Jupyter notebook, and then I will go over each part of the code. And so first we're going to import BioSteam, and we'll also import QSDsan, voice specifically, and then we'll create our SAN units, our components and then set our thermo. And so here you can directly add the costs of chemicals when initializing a waste stream. And so here we can do flush water. And so we can create the waste stream with the ID of flushing water, and we can set the price of that to be 10 cents per kilogram. And similarly, we can do that with the cleansing water. So here we're creating the waste stream, calling it cleansing water, and then setting the price as 10 cents per kilogram. Then we can create different units. And so here we have an excretion unit and a pit latrine unit with the IDs of U1 and U2. And then here the excretion does not have any inputs. We're only going to assume outputs here. And so we're going to output urine and feces. And then these outputs will be used then as inputs into the pit latrine. And additionally, the pit latrine will also have inputs of toilet paper, flushing and cleansing water like we just created above, and then desiccant. And then we'll also create the outputs as the excreta, leachate, fugitive, methane, and then fugitive N2O. And then we can also set the number of users of the pit latrine to be 4, and then the number of toilets we need to be 2. And then we can also set these decay parameters and the max methane emission. We can set all of these. And so now here we're creating the system of our units and our waste streams. And so here we're calling it system 1, and then the path is U1 and U2. And then we can use simulate to simulate our entire system. And then we can use diagram to create this diagram showing how all of the flows and the systems relate to each other. And so now we can look at the costs for each system or each unit, SAN unit. And so we can use dot results to look at the costs. And so first we could look at the excretion unit. So we can identify U1 dot results. And we can see that there are no costs associated with the excretion unit. So there are no costs with the person excreting the urine and feces. So everything should be set to 0. But we can also look at the pit latrine unit, which is U2. And so if we do U2 dot results, we can see what the costs are for the pit latrine. So here we can look at all of these attributes. So we have the number of users per toilet that we set is 4. The number of toilets we are setting is 2. So both of these we set above. And then the emptying period, the volume and the pit area, pit depth, these are all within the pit latrine SAN unit already specified, as well as all of the materials and excavation requirements needed. And so you can also see the purchase cost is $898 US per toilet, or for the total number of toilets, so 2 toilets. And then we can also see the utility costs and any additional operating expenses. And so we can also calculate the costs within this system using certain assumptions. So we can use the simple TEA with certain assumptions to calculate the net present value. And so here we're using the simple TEA. We're identifying that we want to look at system 1 as our system. We can also identify what discount rate we want to use. So here we're using a 5% discount rate, and then what lifetime for the TEA. So here we're using a 10-year lifetime. And so if we do TEA1.show, we can see what the result is. So here, the simple TEA of system 1, we have a net present value of negative $4,642. So overall, it is a cost not any kind of earnings on this system. And the discount rate was 5%. And so these values are stored as attributes, so we can easily access them. And so we'll also note that the sales part does not consider income tax. And so here we can say set C is QS.currency, and then for an attribute in net present value, EAC, CapEx, AOC, and so on, we can figure out what the unit will be for these different attributes. Otherwise, it'll just assume it is per year. And then here we can print the attribute. We were able to look at the different attributes listed. So NPV is the net present value. And so here the net present value is negative $4,642. The EAC is the equivalent annual cost. And here it is $601 per year. The CapEx is just the capital expense. And so here it is $898 US. AOC is the annual operating cost. And so here it is $410 US per year. Sales is any kind of income that you're generating from the system. And so here we're assuming that there is no income being generated from the pit latrines, or you're not generating any revenue from selling any recovered resources either from the system. And so here we have $0 per year. And then you can calculate the net earnings, which is negative $410 per year. And so you can also generate a report that will contain the system flows, the designs, and the TEA results. And the report will be saved to where this Jupyter notebook is saved. So if we wanted to save it somewhere else, you can include path, file, and then where you're going to be saving this Excel spreadsheet. And so here I could save the report as system1.xlsx, and it will save these results to a spreadsheet. So now we'll talk about how to develop your own TEA or simple TEA subclass. So you may need to consider additional cost items when doing a TEA. And to do so, you will have to make your own subclass of TEA or simple TEA. For making subclasses of TEA, you can check out the tutorial in BioSteam's documentation. So here we have a link to this tutorial, but since we've also learned how to make a subclass in the advanced tutorial on SAN unit, we can also go through a simple example to create a subclass of TEA. So to make a usable, not abstract, new subclass of TEA, you need to have at least 3 methods. And so these are 4 possible methods, so you need to have at least 3 of them. And so the first method is _DPI, and this is the method for calculating direct permanent property investment using the attribute installed equipment cost, which is the total cost of all of the equipment. _TDC is the method for calculating total direct depreciable cost using the value calculated by DPI. So this method uses the value from above. _FCI is used for calculating the fixed capital investment using the value created by _TDC. So this method uses the value calculated from this one. And then finally, _FOC is used for calculating fixed operating cost using the value calculated by _FCI. So this value uses this value from this method. And so now I will show you what happens if you don't use these methods. So like I said, you have to have at least 3 of these methods when you're creating a new subclass of TEA. And so this is an example of how to create a bad TEA. And so here we're creating the class bad TEA using the, or subclass bad TEA using the TEA class from BioSteam. And so if I run this line, you can see that there is an error, and basically it says that the subclass must implement a _FOC method unless it is abstract, or unless is abstract keyword argument is true. So this is just saying that we need to make sure we include the methods to create the subclass of TEA. Okay, so now we will go through a good example of creating a new subclass. So this one we will call new TEA. And so for this subclass, let's assume that we need to buy some additional liners so that the leachate from pit latrines won't directly just discharge into the environment. And so we want to calculate that as 15% of the total installed equipment cost. And so since excretion doesn't have a capital cost, the total installed equipment cost of the system will just be equal to that of the pit latrines. Additionally, we want to include a 10% contingency of the direct cost. We also want to pay a 5% property tax on the pit latrine, and then we need to pay $100 per year in labor to clean the pit latrine. So this is how we can write the new class. So I will go ahead and copy this, and then we can walk through what each line of the code means. Okay, so we're importing random just because down here we're going to use a random number, so that's why we're importing random. And so here we're identifying new TEA as our subclass of the BioSteam TEA class. And here we're going to define the new TEA class. So we're going to include self, system, IRR, which is internal rate of return, which is also the discount rate, the duration. And so here the duration will be a tuple of the start and end year of the system. And we'll also include depreciation, which is the depreciation schedule, income tax, which only applies, So the income tax will only apply to our net earnings. So we'll only be taxed on whatever is the net earnings of the system. The operating days is how many days the system is operated per year. And then the length factor is used to calculate the FCI based on the purchase cost, rather than assuming or summing the update the installed cost of all the system, which is calculated from the bare module factors. And then we'll also add these new parameters from the project statement. So here we wanted to do a 15% liner cost. So here we have the 15% liner fraction. We added a 10% contingency, 5% property tax, and then an annual labor of $100 per year. Okay, so now we have this super parentheses. So this is just the same as the BioSteam TEA. And so here we have all of these values related to the BioSteam TEA. And so again, we have system, internal rate of return, duration, depreciation, income tax, operating days, length factor. We also have the construction schedule. So we're going to assume it can be done within 1 year. We're also assuming no startup period. So all of these startup values can be set to 0. And then we're also assuming there's no financing. So each of these can also be set to 0. And then we're also assuming no working capital. So working capital over FCI can be set to 0. Okay, then we have the methods that we discussed. So every subclass of TEA needs to have these methods. And so here we are defining the DPI, and it uses the installed equipment cost. So here we're going to return the installed equipment cost, and then we're also calculating or multiplying by this liner fraction. Then we can look at the TDC to add in the contingency. So again, TDC is the total direct depreciable cost. And so this is based on the DPI that we have defined above. And so here we're going to have the DPI multiplied by the contingency factor. And then we're also going to define the FCI. And so since there's no additional cost, we'll just have it directly return the TDC. And then finally, we can define the FOC. And so here, the labor cost and the property tax is our fixed operating cost. And so even in the case where FCI is needed, we'll still need to have FCI as the method argument. Otherwise, BioSteam will raise an error because when it calls FOC, it always passes FCI as an argument. So here, because we need FCI, we need to define FCI previously. And so here we are going to return the annual labor as well as the property tax multiplied by FCI. And so we can also change other methods. So here we can add in a random cost in the variable operating cost each year. So we can define the variable operating cost, which is VOC. And so here we have the original VOC, which is just the material cost plus the utility cost. But we can also just use this as an example of changing this method. So here we can say the random variable operating cost is just 100 times a random number. Okay, so now that we have our new subclass, we can try it out. So I will go ahead and run this. And then we can try it out. So here we will call TEA2, and we'll use our new TEA subclass. And so here it'll be a TEA of system 1 that we identified above. The internal rate of return will be 5%, which is also the depreciation rate. The duration will be from 2021 to 2031. So this is the start year and the end year. This is the depreciation method that we'll be using. The income tax is 5%, 365 operating days, and we will not be using the lane factor here. Okay, and we don't need to specify all of these because we have these as the default values in the class when we defined it. So now if we look at TEA2, it will print the original variable operating cost is 365, where the random variable operating cost is 25.83. So that was just 100 times a random number. And so for the new TEA, for system 1, the net present value is now negative $5,943 at a 5% internal rate of return. And so we can also look at what the variable operating cost was. So it definitely isn't a good idea to use a random cost since it changes every time we try to retrieve the value. So here, if we look at the VOC attribute, we can see that now it has changed to 420. And so this number will change all the time. But it's just an example of how you can kind of change what is inside this method. Okay, so that is the end of this tutorial, and I hope you found it helpful. I would really take advantage of going through these tutorials to get more familiar with the documentation in QSDsan. And our next tutorial will go over life cycle assessment.